Chakri, what is your view? Are we in for a long winter or we are nearing the end of this decline?
Good afternoon. Thanks for having me. I think, the market is down about, Nifty is down about 10%. Earnings are down, if you look at the various sectors, so 15 to 10 to 15%. And on the other hand, the stocks, some of the PC stocks are down 40, 50%. So from at that perspective, I don't think there is much downside, but what is clearly needed is some kind of a catalyst for earnings to revive upwards. Now, that catalyst can come from an RBI rate cut. I know people are talking about it being postponed to February, but RBI has increased rates by about 250 basis points, very short period of time. So, consumers and companies need to see the other side of the coin, that is the cut-off rates. So while food inflation is high, I think if there is a December cut, that would provide one of the catalysts.
I go back to Zomato. Naresh, it's a bull market stock. 50 became 300, 300 became 240, today it is at 269. Is there money to be made in Zomato, Naresh? It has corrected 30%. Is that enough for a bull market stock like Zomato?
So the stock is really not corrected as much. If you look at it, the highs were around 300. Now we are at 269, just a 10% correction. So too early to get into a stock which has gone up 5x, 6x from the lows. So there's a good possibility the stock can consolidate. Overall, the trend has not been broken, unlike in a lot of other mid-cap names. The last low for the stock back in August, September was 240. 240 was the low in October as well. So out here, till the time it holds 240, the trend still remains up. It could consolidate between 240 to 300. At current levels, the risk reward is not great to buy. But if we see a much larger correction, then maybe one could look at it.
Chakri, Swiggy is better or Zomato is better? I'm not talking about service. I'm not talking about preference or menu card here. I'm talking about stocks.
Yes. I think, Nikunj, clearly, I think Swiggy is a far lower valuation today. Trades at, I think it trades at 7.8 times is what Zomato trades at revenue. This trades at probably about 3 times. So both are similar size companies. They have similar market share. Only the things, Swiggy is slightly less profitable. So I think the valuation differential, could be made up. So I think clearly one can buy Swiggy here at current levels.
Okay, just looking at some of the names right now, while Eicher Motors, of course, is holding out, Apollo Tyres is looking good. Indian Hotels has jumped up a good 3.6%. And mind you, Indian Hotels is one of the few stocks that hasn't quite, given up in the recent correction in the market in the last 1 month. I don't know if we can bring up the 1-month chart. That's a fresh peak on that stock. 742 is where it is. In the last 1 month, in fact, it's gained about almost 4% Chakri, what are some of the resilient to market correction names? And I'm sure Indian Hotels will make it to that list that you've spotted so far this earnings season.
You're right. Companies like Indian Hotels, because, they cater to the higher end of the income segment, which has not been affected. Their spending remains strong. So I think clearly one can buy. Second, now IT, information technology, with Trump coming back and US corporate tax cuts being talked about, that increases the discretionary budgets for IT budgets for companies, which is good for Indian IT.
Well, what do we have? We have a market which is looking, it is not falling. These days, Naresh, if market stops falling, that's also a relief, right? I mean, forget about gains. Nahi gir raha is also good news.
Yeah, so that's the first signal which we get in a downtrend.
And Naresh, for the first time, you smiled today. Nahi gir raha hai, wo bhi achhi news hai, right?
Yeah, so that is how it is.
Kunal tells me to make Naresh smile is impossible.
Yeah, so it's the market which makes you smile most of the time. But as of now, it's a tough time. But if you look at the price action today, we've seen heavyweights hold on. We are seeing a doji formation on the candlesticks. But it needs a follow-up the next day to cross the previous day highs or the next day highs. So for now, we watch out for 23,750, 23,800. If that breaks next week on the upside, then we get a short-term reversal.
Much like Indian hotels, I don't think Zomato as well has fallen a whole lot, right, in the recent correction in the market. And now, of course, with its F&O inclusion, this chatter that next it's going to be eligible for a nifty inclusion as well, perhaps. What are you reading on the charts of Zomato at 269?
Yeah, so Zomato definitely looks good. Recently, it has surpassed the crucial moving average also, and the correction was limited. It found support around 240 and bounced back sharply. So from the new age tech company, it is one of the strongest company. The technical setup is quite good. It has been resilient. And it looks like that it is headed higher. 285 is the next resistance I see for the stock, which was a swing high, previous swing high, and the yesterday's low becomes the crucial support. So for the short-term traders, I would suggest support at and stop loss at 240, 254, which was the yesterday's low. It becomes the strong support now. On the higher side, as I said, 285 is the next resistance for the counter, and it is likely to outperform like Indian Hotel has been doing. Zomato is also that kind of setup I can see on the charts.
Okay, now we're talking about the real big beneficiaries of this F&O inclusion. 40 plus names, 2 or 3 are the odd ones out, but 2 or 3 ones are the ones where excitement is going to only increase. Names like Zomato, Jio Financial Services, can they really make it to the Nifty? Can they really make it to the Sensex? Well, Nomura feels that. And Sumit's got details on what the Nomura's view on the recent F&O inclusion is.
Well, yes, 45 new stocks will be a part of the F&O basket from November 29. Now, this expansion is quite significant given the fact that since 2015 till now, only 100 stocks were added, and now we are seeing a 45 stocks addition in just one go. So, a few stocks that we need to keep an eye out for. Firstly, it's Jio Finance and Zomato. Now, both these stocks were among the top key candidates to be included in the Nifty 50 semi-annual review back in September 2024. But given the fact that both these stocks were not part of the F&O stocks, they weren't included in the Nifty 50. Now, with this inclusion coming in, both these stocks now have a very high chance of getting included in the Nifty 50 index, which in the next review, which will happen in March 2025. Now, as per Nuvama alternative, if Jio Finance and Zomato get included in Nifty 50, then it could replace either 2 of these 4 stocks, that is BPCL, Eicher Motors, Hero MotoCorp and Britannia. Now, if they get included, then the inflows that we could see in Zomato and Jio Finance going forward could be anywhere between 400 to 660 million US dollars, and the outflows in the for BPCL, Eicher Motor, Britannia and Hero Moto could be anywhere between 240 to 260 million US dollars. So keep an eye out for these stocks. Now, as per IFL alternative research, Zomato could also get included in the Sensex index, and this review will happen in December 2024. And if it gets included in the Sensex, then the inflows could be anywhere between 400 to 445 million US dollars as per IFL alternative. Now, they also analyze the stock performance of the stocks that get included in the F&O basket since 2015. Now, they're saying that the number of stocks that have got included in the F&O since 2015 is close to 100, and the average price movement has been positive 3.2% for these stocks. Now, the percentage of stocks that have seen a positive movement from the announcement date till the inclusion date is nearly 70%, which means that 70 out of these 100 stocks have seen a positive movement since the announcement has been made of getting included into F&O until the time the actual inclusion has happened, and nearly 49 of these stocks have seen a positive move after 20 days after getting included in the F&O basket. So keep an eye out for these stocks that are getting included in the F&O. We could see some positive price action in them.
Those are the F&O inclusions. Let's also take stock of how Reliance has actually panned out in the last 1 month or so, because this is one leadership stock which has corrected a fair lot in the last 1 month. It's almost seen a 6% correction and a fair amount of market cap loss as well. 1268 is where the stock is in today's trading session. Chakri, what would it take for Reliance to make a meaningful comeback? And after the recent correction, does it become a buy now?
The Reliance as a stock is looking good right now, simply because, the sum of the parts valuation is in its favor. Many of the businesses are not reflected. At the same time, I think one of the reasons why the stock has corrected because of the huge volatility in prices, oil prices, which has, kept the refining margins in a very suspended animation. You're not very sure in their hedging policies, which most companies have this problem. So given all this, I think, with the current outlook of a revival in the US and the whole of Europe is also cutting rates, So therefore, and therefore reviving economies are always good for oil and gas stocks, along with its other businesses.
If you like this video, then like, share and subscribe to ET Now.